Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we got some jobs numbers that came out today. We got the ADP non-farm payroll employment report coming at 146,000. This is a private number that comes out from ADP, basically measuring how many jobs were added for the month. So the number came in at 146K versus the expected of 166,000, which was less than expected. And the revisions from the previous number also declined to 184,000, and that's basically revised down from 223,000. So this is very interesting because this week, Friday, we get the non-farm payrolls report. This is the U.S. government's report that talks about how the job market is doing. And when we look at the last non-farm payrolls report, it came in very, very, very weak. And now, the reason for that weakness had to do with the hurricanes and also the disruptions in the shipping industry. Now, what's going to be interesting for this non-farm payrolls report, will we see that number come in weaker, or will it pick back up, right? So that's what we want to see. And from today, the private number, the ADP number, it's showing some weakness there. Also, when you look at the other number, like the ISM non-manufacturing number that came out also today, we see that number came out weaker than expected. So the employment number came out 51.5 versus the expected of 53. And the headline number, the PMI number, came out at 52.1 versus 55.5. Still, it's in the 50 area, the 50 range, which suggests that we're still doing fine, but when you compare versus the expectation, it's quite below. When you look at the non-manufacturing prices, that went up. That went up to 58.2, higher than the previous number that was reported, and higher than the expected of 56.4. Now the question is this number to be ignored? Well, according to the reaction in the bond market, it seems it is, right? We're still getting those rate cuts from the U.S. Central Bank. Even though the Fed might be thinking about pausing in December, there's a 50% chance. We will know more as we get more data, especially after non-farm payrolls report and the inflation number that will come out. Even though if they do decide to pause in December, the rate cut cycle is still going to continue. And we heard from certain Fed members that they're not stopping the rate cut cycle. They still want it to continue to cut rates. And even though when you get components in the reports like ISM prices moving up slightly higher. Now, a little bit of a contributing factor to the higher bond prices that we're seeing today has to do the weakness with the ISM report and the ADP number. And we're starting to see now, a nice bid in the bond markets picking up here after selling off for quite some time. We're starting to see quite the bid here due to the weak numbers. Now the question is, do these numbers that we see here, the ISM employment, the ADP numbers, does this forecast that we might see a weak non-farm payrolls report on Friday? It's possible, right? We could see a weak number. The question is how weak, right? The previous number was horrendous, but that had to do with disruptions. But can we confirm that maybe it wasn't related to the disruptions and there's really truly an underlying problem? And we might see that in this report. Now, if we get a negative number, that could be very shocking, and that would send the bond market flying higher. If we don't, and we see, not a drastic change, even if it's a slight weakness, it will probably be brushed off until we get more data, right? So it's going to be interesting heading into Friday how the number comes out. And as we get more data, we will also see how that may play out when it comes to the Fed's rate cut cycle. And with that in mind also, let's not forget that all the recession talks that were being talked about seems to be completely dead. We got the stock market moving up higher, S&P 500 hitting all-time highs above 6,000. We got NASDAQ, same thing here, above 21,400 as well. We got Dow, we got the Russell 2000, all moving up sharply higher. Can we see a change in 2025? That will all depend on how bad the job market ends up being. How bad do these numbers end up being? If not, then we could see continuation of the equity markets, even the crypto markets and risk assets out there. Now, keep in mind one thing, right? Although there may be problems in the economy, and the economy can still roll on and the stock market can continue to melt up higher and higher, it may not cause any crash. You may get a maybe temporary correction is a possibility, but to get that crash, you would need some sort of event, right? An event to trigger something like 2020, COVID. It's an event that triggered the crash in the equity markets, right? Same thing in 2008. Before that, leading to the real estate crash, we knew about housing markets and residential markets being a bubble, right? You're getting a lot of people buying hundreds and hundreds of houses, being over levered, and then you got all of a sudden an event where a bank account pays off a certain loan, and there you go, plunge in the span of overnight to a month or two or three, right? Same thing during the dot-com bubble, right? There's got to be some sort of event to trigger. There's problems there. We're seeing the job market, especially the non-farm payrolls report, being steady. We're seeing the unemployment rate tick up slowly, and we're seeing the weakness among all the other countries out there as well, right? Especially Canada, the unemployment rate skyrocketing or moving up higher and higher there. The weakness is there. It's just you need some trigger, some event to finally break. And when will that trigger come? Where will it come from? Right? Today, what do we know today? Today we know that there's risk in the commercial real estate market. There's risk with offices. We've seen countless of layoffs. Right? Yet the equity market makes an all-time high. And it can continue on and on for a year, 2, 3, or more until the trigger or the event happens. Where and when will that event come? Will it come from trade wars, from tariffs? Will it come from some event that happens with Donald Trump or the new administration? Will it come from, someone, maybe an asset manager, like, for example, BlackRock, completely, defaulting on many investments, causing a trickle effect? There could be countless and countless of ideas or reasons that could cause the event. It would be difficult to pinpoint one, but it would be interesting to see what would it be, and it could be a very long time until we see that. Now, when I look at the yield curve went into inverted territory again, which makes you think, does it suggest something there about an upcoming recession? Now, currently the yield curve moved out of inverted territories, now sitting at, in a positive area. Before it was in negative territory, in inverted territory, but now it's out of it. The yield curve has been sitting in, previously last year or so, sitting in negative territory. We're seeing it come out. What are the telling signs there? What are the telling signs from the bond market? Are they expecting aggressive rate cuts to come? And why would that be the reason if all is fine so far? Okay, yeah, the ISM came out lower, but it's still in the 50s. Still fine. We're not seeing an ISM at 40 or 30 or so on. Right? We're not seeing the unemployment rate sitting at 10% right now. right? It's okay, things are plugging along. But I would say watch the bond market starting to pick up a bit. It seems like it's a little bit of a bottom formation. This is not investment advice or anything like that. It can definitely turn around, if inflation picks up and then you got rate hikes all over again, and then, inflation's heating up again, the bond market can turn around very quickly. But there's telling signs there, clues to be told from the bond market and the data, and that's what we will need to watch for this coming report and the coming reports in 2025, and how the Fed will react. We already know in other countries, again, I'll name it again, Canada, where, there are very telling signs of problems there. And again, you just need a trigger. All it takes is a trigger for something to break. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.